from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, the FTC comes at Facebook again. 2 months after a judge threw out the agency's antitrust suit against the social network, the FTC files a new one, this time twice as long. Plus, the former head of the SEC calls for more clarity on the taxing of cryptocurrencies. We'll speak to one of the earliest investors in Coinbase, Gary Tan, for his outlook on the regulatory ride ahead. And ransomware attacks at an all-time high, but new technology promises to help customers get their data back without having to pay a cent. Microsoft board member and former CEO of Symantec, John Thompson, will weigh in on the rapidly evolving cyber threat landscape. We'll get to all of that in a moment, but first, a volatile day for the markets. I want to get all the details with our Bloomberg's Kriti Gupta. Kriti, take it away.
Well, Emily, it was a volatile session, a little bit choppy because you started to have markets really start off on a risk-off tone. A lot of them kind of digesting that taper talk that we talked about yesterday. At the end of the day, realizing, well, this has kind of been in the works for a while. This isn't exactly new news, and this is really where you saw the kind of buy the dip mentality. The S&P 500 ending in the green, big tech in the green as well. I mean, you can see the one-year kind of charts here. This is really has to do with just the monster gains today. Today in particular, they ended up higher, but you did see some of those cyclicals take a little bit of an undertone. And the VIX, of course, down on the year, but spending its second day above that crucial 20 handle. I also want to show you what the Chinese kind of ADRs did, because that's going to be a really crucial piece of this. Take a look at the NASDAQ Golden Dragon Index. This is the RSI. It's that technical signal that tells you when the time to buy is. And right now, this is what the circles are. It's telling you it is oversold. So this has traditionally kind of been the road to show that perhaps there could be a point where they start to attract a little bit of buyers. The question is, do we see them tomorrow? So which brings me to what is happening in today's market action, because you did all see in the subsectors a lot of underperformance in those tech subsectors, a lot of those intraday NASDAQ biotech, the Golden Dragon Index, like I said, underperforming, but the semis actually in the green, which is interesting just given their exposure to China, and we know that the demand story in China is under some pressure. So once again, from the macro outlook, a little bit of a mixed session. From the micro outlook, let's get to Ed Ludlow.
Yeah, you talked about semiconductors, Kriti. Looking at NVIDIA, up 4%, really big gain following its earnings, strong second quarter earnings, bullish outlook for the coming or current third quarter, saying that demand for semiconductors is strong, but the supply constraints remain well into next year. Less of a mover, Facebook. Emily, I know you're going to talk about this later in the show. Down just 0.1%. I flag it because, yes, FTC, antitrust regulators filing a new lawsuit after the last one was thrown out in June. But Facebook seems completely resistant, if you look at the share move, to any concern about regulatory scrutiny, regulatory action. And I want to focus in on Netflix as well. Up 4% Thursday, biggest jump since March. And it's basically on price hikes. A report out from Yipit Data saying that Netflix is raising prices, particularly in Europe. And exciting, a little tidbit for you, Emily. Today's gain takes Netflix just into positive territory year to date, up 0.5% so far this year. Let's bring up Facebook as well, finally, and just look at how Facebook has performed year to date. It continues to outpace the S&P 500. When we had earnings, we were talking about concerns about the outlook for Facebook when it comes to advertising, user growth, and now we have the FTC coming back for a second bite of the apple. Share price doesn't seem any concern on any of those fronts, Emily. So that's something to dig into with investors over the next few weeks. Emily.
Right. These regulatory overhangs really don't seem to impact Facebook much at all if you look historically. Ed, thank you so much for that roundup. I want to dig into that lawsuit now. U.S. antitrust officials have refiled their monopoly suit against Facebook. A federal judge dismissed the FTC's original suit back in June, saying the agency failed to provide enough detail to support its claim that Facebook has a monopoly in the social media market. The new suit alleges that Facebook violated antitrust laws by buying Instagram and WhatsApp in order to eliminate them as competitors. Bloomberg's Naomi Nix joins us now for more. So, Naomi, the FTC comes roaring back just a couple of months later with similar arguments, but this one twice as long. What's different about this new lawsuit?
So the FTC provided some new details, really getting at that question of, is Facebook a monopoly? There were some new statistics. A lot of it was actually redacted, But they made some claims around, how much time Facebook's active users are spending on its platform as like sort of one measure to prove that it really is dominant in the market space. But like you said, a lot of the lawsuit made some familiar claims about, Facebook's acquisitions of Instagram and WhatsApp, about, Facebook requiring third-party apps that connect to its platform to say that they're not going to compete with Facebook. And so these kinds of practices, have been under scrutiny, and they came up in the FTC's lawsuit today.
Now, Facebook, a spokesperson saying there was no valid claim that Facebook was a monopolist, and that has not changed. Our acquisitions of Instagram and WhatsApp were reviewed and cleared years ago, and our platform policies were lawful. I thought what was interesting about this suit is the way they differentiated Facebook from Twitter, YouTube, TikTok, which, according to the lawsuit, are more public-facing. The content generated is meant for a more public audience, where Facebook is more targeted, more personal, and therefore they said Facebook has a monopoly in that kind of a market. What do you think it says about Lina Khan that she came back with this and so quickly?
Well, obviously Lina Khan has been a leading advocate for a more progressive vision of antitrust enforcement. She's the one who's arguing that that the traditional measures of competitive harm, which is do consumer prices go up, is insufficient to really capture these tech giants, which are often offering free services. And so that she came back with a suit this quickly, I think, is not surprising. It's what her supporters in Congress and beyond were likely expecting. And whether she succeeds, will be an interesting test case to whether she'll be able to get her agenda accomplished. I think it'll also, give, depending on which direction it goes in, it'll give Congress some nudging in one direction or another to get at the question: do our current antitrust laws, are they modernized enough? Are they up to date enough to capture, proper enforcement in the technology industry?
All right, well, we'll be following to see how that one plays out. Facebook, of course, had asked Khan to recuse herself from this particular suit, which the FTC said they would not do. Bloomberg's Naomi Nix will continue to follow your reporting on this. Meantime, Apple has closed one of its stores in South Carolina after more than 20 staff members were exposed to COVID-19. The iPhone maker declined to comment on the temporary closure. However, stores of the Charleston location size typically have 70 to 80 staff members, suggesting about a quarter of employees were exposed. The situation underscores the company's challenges to get its retail operations back to normal. And late Thursday, IBM announced it's temporarily closing its offices in New York amid rising cases in the Big Apple. However, the company has stopped short of delaying plans to reopen other U.S. locations by September. Coming up, Initialized Capital managing partner Gary Tan is with us. His thoughts on the turn toward tighter crypto regulation in Washington. Next. This is Bloomberg. How should digital assets be regulated? Former top securities regulator Jay Clayton says existing U.S. regulations a solid precedent for rules. He said, quote, new technology should not cause us to change the fundamental protections in our securities and other financial markets. And in regards to the crypto provisions currently in the U.S. infrastructure bill, Clayton went on to say that clarity around taxation of cryptocurrencies is a good thing. So what could regulation for crypto look like? Let's bring in Gary Tan, managing partner at Initialized Capital, and of course, one of the earliest investors in Coinbase. Gary, always good to have you with us. So what's your take on the recent comments from Jay Clayton, former head of the SEC, Gary Gensler, current head of the SEC, taken in tandem with this new infrastructure bill that sets up crypto to be regulated much more broadly?
Yeah, I think the most surprising thing about the infrastructure bill to me was how quickly this Warner Amendment actually almost killed modern innovation in crypto in the United States. I mean, the Wyden prior proposal was actually very fair to validators and specifically programmers, which is incredibly important. And one of the big schisms that sort of come to my mind watching the Warner Amendment actually almost pass was actually, who there is a lobby, a very powerful lobby out there that is Bitcoin maximalist. And that's fascinating to me. I mean, it's been 7 years. Ethereum has been out, and DeFi is up 13x year on year. NFTs are huge, and a huge growing market, $1 billion in CryptoPunk sales alone. And it's just amazing to see the Bitcoin maximalism is alive and well in 2021. It's unbelievable.
Does it concern you?
What's weird about this is it's actually religious. I sort of see it from both ends. It's sort of an argument for who gets to go to heaven. Is it the Bitcoin maximalists, or is it Ethereum, or is it one of the other coins that we maybe haven't even heard of yet? And for me, I think the closest analogy I can make is that Ethereum and things like it, that's sort of more like a company, right? The salient feature of Bitcoin that I think is very valuable, actually, is that Bitcoin doesn't change. But to take that analogy further, I think being a Bitcoin maximalist to me is like being a commodity trader that sort of refuses to believe that there could be new companies, that are new teams working on new software, attacking new markets. And that's like saying VC shouldn't exist. And for me, I've been a VC for 10 years, funded hundreds of companies that have reached product market fit. And I'm like, I know that that couldn't be true. And the reverse is like, I'm not an Ethereum maximalist. I'm not going around and saying commodity traders should not exist, for instance. I think that there is a deep, true value for Bitcoin as an unchanging thing. All I'm saying is I actually think that, protecting proof of stake, protecting validators, and protecting the programmers who are going to create the next digital future, it's very important for us as Americans to actually keep that sort of innovation right here in the United States.
Now, Gary, I recently interviewed the man widely recognized as the inventor of Ethereum, Vitalik Buterin, who was fairly critical, definitely skeptical of Jack Dorsey's DeFi plans. Somebody who we think of as someone who really understands what's going on here. Take a listen to what he had to say.
I think a lot of these projects wants to actually do this, right? Because I think a lot of them are realizing that being a kind of centralized focus of power and having control and of so much of everyone's data and all of these things, like is not just an asset, it can also be a liability as well.
That's just a short snippet of what he had to say. Gary, I know you've been in some threads with Jack on this. What's your take of the criticism and whether there's something there?
I think that Dorsey is an adherent to the Bitcoin world, and I don't begrudge, I'm not here to actually judge people based on their faith. It's actually that it's just sort of surprising. Jack Dorsey is an amazing software engineer, and he happened to be the core founder for two of the biggest, most important things in our society. I mean, Twitter as a platform for identity and for thoughts, and then Square for payments. But I can see where that religion actually comes into play, because when you have a fully Turing-complete identity that could be totally decentralized, that happens to be the biggest threat to actually what Jack holds very, very dear to him. And I wouldn't begrudge him that, but I do think that it sort of makes sense that he might be a little bit threatened by the prospect of Ethereum and frankly things like it that are programmable money. You can do a lot of things that you really have to bend over backwards to do with Bitcoin.
What do you think about Bitcoin versus Ethereum, especially given that Ethereum is going through these major upgrades?
I'm really impressed by Ethereum. I think EIP 1559 was a really big moment, showing that actually this is a group of people, software engineers in a community who can actually evolve and create this idea of ultrasound money. But at the same time, there are critics of that community saying, well, if they could change it to ultrasound, they could change it the other way too. And I actually think that's a pretty valid argument. So for me, I think it's probably better to be agnostic. The reality is it's up to the software engineers and the creators to actually create platforms that enable things that are actually usable. And for me, it's just, I can't look at DeFi, I can't look at NFTs, and I frankly can't look at the stream of really smart software engineers who come into our offices every day and say that, Ethereum isn't the platform to sort of focus on and to beat right now.
Huh. Meantime, we got some really surprising numbers from Robinhood this week that they made more money on crypto trading than stocks and options combined, a ton of it coming from Doge in particular. What do you make of that? I mean, is that a concern for their business model?
Well, I'm not a fan of Doge. I actually think that it's just not a better cryptocurrency than a lot of the others. There are just so many others that have better characteristics. And so the biggest thing to me is, when you go on Robinhood, and I know that they want to add custodial wallets at some point, but and again, I'm a big holder, long-term holder of Coinbase. But I do have to point out, a lot of people talk about fee compression, they're worried, and every other day, frankly, you hear about people saying, like, we're going to come after Coinbase. But I think one thing to really note is let's take a look at custodial ownership of these cryptocurrencies. And, frankly, there are hacks every other day of centralized, and decentralized exchanges. This is not easy to have custody, to have insurance, and to actually be something that enables, that 13x increase in DeFi, to enable billions of dollars worth of NFTs, to be able to actually participate in that. You need custodial wallets. You actually need what Coinbase has done and what Coinbase is doing with Coinbase Cloud for proof of stakes, sort of the Bison Trails end of the business.
All right, Gary Tan, initialized co-founder and managing partner. Always so much to talk to you about. I know there's so much more we want to get to. We'll save that for another conversation. Gary, always good to have you here on the show. Okay, coming up, suspending production. Toyota announces it is slashing output for the month of September, in part due to the global chip crisis. After the break, we're going to hear from Toyota Executive Vice President of Sales, Bob Carter, next. This is Bloomberg.
We believe that the worst is past.
It is very fluid.
The chip shortage is going to run well into 2022.
The chip shortage is also, which is driven by the capacity. Already the actions has been taken by our suppliers, and this will also go away.
We do think we'll probably be into at least mid-22 until we start to see supplies rebound.
Whether this will go away in short term, I don't think so.
We've seen shortages of somewhere between 5, 10 to 20% maximum production compared to our initial plans.
Well, you heard it there. The global chip shortage remains front of mind for car makers and investors. Toyota Executive Vice President of Sales, Bob Carter, says the crunch is a big reason the automaker has cut production for the month of August. It is also facing other supply chain issues from Southeast Asia and Europe. Carter spoke earlier with my colleagues Guy Johnson and Alex Steele.
We've been managing this supply chain disruption very well over the last 4 to 6 months. But quite frankly, due to the disruptions we're seeing in Southeast Asia as well as in Europe, we had to announce overnight that we're going to be reducing production in the month of August between that 60 to 90,000 units. And again, we're evaluating the impact on September, but it appears to be 70 to 90,000. This is far beyond just microchips, although microchips are the center of most of this activity. But we're seeing a wide range of supplier disruptions due largely to continued outbreak of COVID.
Robert, you've done a really good job managing your dealership network. You've been really flexible, really kind of coordinated. You've actually had a really good communication strategy with dealing with them, and this has been reported pretty widely. This isn't just me saying this. What are the dealers saying right now? How kind of under strain is the inventory program? How flexible is it in terms of being able to get vehicles from one place to another where potentially they could be sold, to manage that kind of inventory that you do have as nimbly as you can?
Well, thank you for that. We communicate extremely well with our dealer and retail partners. What's a little bit of frustration is that natural demand for the industry remains to be very high. If we're projecting demand without supply chain disruption is in excess of 17 million units on an annualized basis. But as we've been seeing over the last largely 60 days, the industry sales are coming down to around a 14.5 market as inventories are just purely depleted. So I'll give you a good example of that. Last month, we started the month with about 40,000 units in inventory, but yet we're able to sell 225,000 units. And that's because of our 15 plants here in North America. We're continuing to produce. And our dealers do an excellent job with serving the customer for throughput. But now with, as we just previously said, the supply chains in Southeast Asia and in Europe are so critical that we're just not able to continue that level of production for the months of August, and it will go into September.
So, Robert, I wonder what the long-term fix is. Obviously, we can make chips at home in the U.S. Okay, that makes sense. But we're also having sort of partial closures from ports in China, for example. It feels like herd immunity for COVID's getting pushed out. It may not be there at all. So this may become a full reality of life. How do you fix it to still run your business?
Well, that's a complex question right now. What we really need to do as an industry is we need to solve this pandemic and bring a safe work environment to our team members. I'm really proud of our 15 plants here in North America. We are up and producing. We're social distancing. We've returned to 100% mask wearing. We do have a very solid plan in North America, but yet we are dependent upon second and third tier suppliers that are coming out of Asia and Europe. And that is really the issue of this problem.
Toyota Executive Vice President of Sales, Bob Carter there. All right, coming up, to get ahead of the next ransomware attack, Microsoft is investing in software startup RUBRIK to help customers recover their data. I'm going to be joined by RUBRIK CEO Vipul Sinha and Microsoft Independent Director John Thompson for an exclusive interview. That is next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Shares of DoorDash dropping after SoftBank offered to sell $2.2 billion of its stake in the company. This according to a source who said the block trade was done through Goldman Sachs. Joining us to break it down, who else but our own Ed Ludlow. So Ed, DoorDash just reported a pretty strong quarter. Does this have more to do with DoorDash or SoftBank trying to address some of its own losses?
Yeah, it's a great question. The share's biggest drop since early June. You can see there on my screen. When you see a big block trade like that, the psychology of the market comes into play, right? A big investor dropping big shares, other investors panic and they start to sell. But there's also just an issue of market mechanics. If you sell that many shares, you flood the market with supply, pulling the price down. Very quickly, look at how the stock's performed yesterday. As you say, the story of DoorDash has been strong. There's been stickiness with food delivery, my favorite buzzword, as you know, Emily. You know, they've had staying power throughout the pandemic. Yes, shares are down from a February high, just marginally. But this is much more a story about SoftBank, as you say. SoftBank has been on a selling spree. Pull up some of the stocks that they sold. In the second quarter, they trimmed their stakes in these companies, Facebook, Uber, DoorDash as well, Netflix, by $14 billion. The question, of course, is why and who's behind it. So bring up a picture of the most important man right now in the world of private investment startups, Masayoshi Son. For so long, Masayoshi Son was against exits. He was against liquidating, against cash. But SoftBank wants to fuel this next wave of investment, right? New cash into startups. Really what we're seeing from this guy and from SoftBank is a change in their own psychology about wanting to exit, to get some cash in the pocket and invest in the next wave of startups as well. So that's kind of more what's at play here. It's part of not an isolated incident, but a run of position trimming that we've seen from SoftBank throughout 2021. Emily.
All right, Ed, thanks so much. Interesting perspective there. Meantime, it's been quite the year for ransomware attacks. From Colonial Pipeline to Meatpacker JBS, attackers have spread ransomware to some 1,500 businesses. And as more companies go to the cloud and manage hybrid workforces, security more critical than ever. To get ahead of the next attack, Microsoft is investing in software startup RUBRIK to help customers hit by ransomware recover their data without having to pay. I want to bring in RUBRIK CEO Bipul Sinha and Microsoft Independent Director John Thompson for an exclusive interview. Bipul, I'll start with you. It's been an incredible year, unprecedented, really. How do we even start to stop these ransomware attacks from happening?
It's been an unprecedented year because all the digitization and acceleration to the cloud that has happened in the last 18 months, it is creating a lot bigger surface area for attackers to get in. And folks needs to have a very strong strategy to be able to recover from ransomware. I mean, White House came out with the zero trust framework, and that's what RUBRIK and Microsoft are focused. Microsoft has this umbrella strategy around zero trust from prevention, detection, and RUBRIK is coming in for assessment and mitigation to really complete the story and help our customers digitize securely.
So let's talk about the payment part of this. How do you enable customers to get their data back without paying? I mean, because some of these customers are paying millions of dollars.
So the core issue is, how do you get your applications back up and running? How do you get control on your data? And that's where you need to have your backup absolutely rock solid. And that's the core part of the strategy, that how do you prevent backup from getting infected? And this zero trust based, truly immutable backup that cannot be like touched by ransomware is the key to really recovery. So it's the combination of guaranteed availability of data plus the fast recovery is how our customers don't have to pay to the bad guys.
John, Microsoft itself has been a target of cyber attacks in recent months. What does Microsoft get out of a strategic investment like this?
Well, RUBRIK and Microsoft have been partners for quite some time. As a matter of fact, in the year 2018, I think it was, Microsoft announced that RUBRIK was their top partner that year. And what's evolved, quite frankly, is this notion of zero trust, and more importantly, the concept that more and more people are going to move workloads and data to the cloud. And so creating a partnership, a deeper partnership with RUBRIK was a very, very important element of what Microsoft is trying to do to make sure that people know that its platform is open to all apps and all services.
Now, Bipul, there are a number of examples where you helped the victims, Yuba County, California, the city of Durham, North Carolina, big Australian manufacturer, get their data back without having to pay. Once the attack happens, talk to us about the steps that are taken in order to do this, and whether, how often the perpetrators can be brought to justice.
So the critical piece is that once attack happens, folks go back to see if the backup is intact. And what we are seeing is that 2 out of the 3 legacy backup platform is impacted by ransomware. And that's where RUBRIK comes in. Because of our unique architecture of zero trust data management, we are actually guaranteeing recoverability. So folks go in and look at their backup and say, tell me, like, is my backup intact, number one? What has gotten impacted? Number 2, is there any sensitive data involved in this attack, so that I need to look at dark web and other places where my customer data or employee data is exposed. And then they start to doing the recovery, where they take the data recovered and then they analyze the data to make sure that everything is intact. It is a very cumbersome process. What is important is that availability of data, because that's how our customers don't have to pay the bad guys. So the ability to identify the attack, ability to quickly recover, and ability to get the applications back up and running. And in fact, business back up and running is how our customers say, we are not going to pay any ransom.
John, you've been in the tech industry for a long time. You were the CEO of Symantec. How would you describe the scale of the threat level we're seeing now compared to years past? John, can you hear me?
Yes, I can. I'm sorry. I said
sounds like we might have lost. Are you there? Okay, go ahead, John.
Yeah, I said it's
I can
unprecedented.
hear you.
Yeah, okay, it's unprecedented. Did you hear that? Quite frankly, when I joined
I
Symantec
did. Unprecedented.
When I joined in 99, the cyber threat environment was relatively small. It was more about the endpoint. But as people have grown, or companies have grown exponentially, it's become more now about the server and the data that is being stored in those servers. And that has created an enormous threat opportunity for every business and, quite frankly, every individual that is working online today.
So, John, what is next? What should we and what should companies be most afraid of? What do they need to worry about at this point?
Well, I think the simple solution or concept that has been brought forth of zero trust is very, very relevant today. It's like know who the subscriber or caller is, know where the data content is coming from, know where the application service is being used. I got just yesterday a ransomware notice from Zoom suggesting that I needed to pay my bill. Well, I don't have a Zoom bill. As a matter of fact, my business pays for the Zoom bill. And so it clearly was a threat to me, and just like everyone else gets every single day.
Now, Bipul, we've recently seen cryptocurrency become a bigger player in these ransomware attacks where the attackers are asking to be paid in cryptocurrency. How does that change the game?
So cryptocurrency really liberates money from fiat currency and make it available to anybody around the world. But the side effect of cryptocurrency is, and all the privacy that comes with it, is bad guys are utilizing it to get money anonymously and get money transferred. I think this, as we innovate, the thing is that as we innovate and bring new services online, the bad guys are finding new services to make use of for their own bad purposes. What we need to do is we need to have a strong security framework around how we use application, how we use data. And clearly, the traditional mechanism of prevention detection is not very effective. So people have to really think about inside-out security. Is my data protected? Is my application protected inside out? So that you can utilize all kinds of technology, including crypto, but really protect your core IP, which is data, your core IP, which is app.
All right. Well, certainly something we're going to continue to follow and cover as these attacks continue to pop up. RUBRIK CEO Bipul Sinha, Microsoft Director John Thompson, thank you both so much for joining us. Coming up, a growing number of fashion designers tapping today's most relevant brands to appeal to the modern consumer in a new way. Joining me next, StockX CEO Scott Cutler to talk about streetwear and collectible trends. This is Bloomberg. Amazon is reportedly looking to expand into an area where it has been a disruptor, brick-and-mortar retail. According to Dow Jones, the e-commerce giant plans to open several large department store-style physical retail outlets in the U.S. This would be in addition to the bookstores and other physical stores the company currently has, including Whole Foods. The first stores are expected to be located in Ohio and California and would extend the company's reach in clothing, household, electronics, and other products. Meantime, Amazon's also in favor with Wall Street analysts. Every single one who rates the stock, all 55 of them, have a buy rating or equivalent to a buy. The rare blanket bullishness has been put to the test as last month's unexpectedly weak sales forecast complicated the company's growth story. Shares have tumbled nearly 15% from the July peak. Even so, many analysts see long-term tailwinds for its online retail and cloud divisions. Well, collabs reign supreme when it comes to items bought, sold, and traded on StockX. Out of the top 10,000 apparel and accessories on the online-only marketplace, nearly a quarter of them are collaborations between 2 or 3 brands. Think Gucci North Face shirts, and Coach, and Bape bucket hats. Joining me now for a deeper look at the nexus of high fashion and streetwear is StockX CEO Scott Cutler. Scott, I'm struggling to imagine how I could make a bucket hat look cool, but somebody out there is certainly doing it. These design collaborations aren't necessarily new. What is different about the collaborations of today from previous generations?
Well, what's driving it is this next generation consumer that's looking beyond the brands for inspiration. And so they're looking to the influencer, the celebrity. And what you're seeing is brands drafting off of that demand from the consumer and entering into these really unique collaborations that appeal to this next generation of consumer, releasing great products that this consumer is really attracted to.
My producer Jackie is reminding me it's Bape, not Bape, okay, which shows just how unfashionable I am here at home. But let's talk about the hype, the draw, the attraction to StockX. You know, what is it? What's the twist that you're putting on this merchandise that makes it also desirable?
Well, StockX is a trusted global platform for consuming and trading current culture. And today, current culture is very much defined by the consumer. And StockX is a place where typically you find access to those items of current culture that you can't find anywhere else. But today, as brands are using scarcity as a model to drive demand and are using these collaborations to drive that, what's really interesting is these collaborations are up 200% over the last 2 years. And the price premium that brands are recognizing as a result of these collaborations are 60% above what they would get normally. And so, you know, it is a flywheel that works on both sides, both for the consumer and the brand.
So we're also seeing a revival of fashion items that were previously out of fashion. Bucket hats for one, Crocs, Birkenstocks, those I do know how to pronounce because I remember them from high school.
Sure. So Crocs, as an example, collaboration with Justin Bieber, Bad Bunny, Post Malone, up on our platform over 400% year over year. Birkenstocks, very cool when we went to college, up 600% year over year. Collaboration with a great brand in Stussy. Telfar and handbags, another place, up almost 300%, largely with fans including Beyonce and Oprah. So again, leveraging or drafting off of these tailwinds to create something new out of brands that maybe you forgot about.
So, you know, talk to us about the trends that you see the fashion world taking, because there's definitely this push towards sustainability, towards the circular economy, away from fast fashion. Is that something that's here to stay?
Well, I think the big macro trend that's driving certainly our business is really that this next generation consumer is changing their thinking about what it means to invest today. They're looking at physical assets that are actually more like investment assets. So they're seeking out culturally relevant items in the physical world, and they're making investment decisions around that. That's certainly a new trend. And as you look at the areas of sneakers or in collectibles or even in apparel, now as these consumers look at this as an opportunity to invest, you're opening up an entirely new addressable market for consumers and brands and companies like StockX to provide a differentiated service meeting this demand.
Now, talk to us about the real value. I mean, how will we know the value of investing in a piece of clothing or a pair of sneakers versus a stock?
So StockX was built on a platform of providing transparency of the pricing of these items of current culture. And so if you come to the platform, you're able to actually see in real time what an item is trading for. And then you're able to make an investment or a purchase decision based on that price history. And there's third-party proof to be able to support this. Had you been an investor in a lot of these areas in collectibles or in sneakers, these areas of physical goods, you would have outperformed the S&P. And in fact, a majority of the adults that are purchasing a sneaker today, 40% of them are making it for an investment decision, not a consumption decision. So that correlation between pricing and market pricing and it being an investment is, again, a driver for growth in the industry.
Could NFTs have a role in your business going forward? What do you think about that?
Sure. I mean, as we think about digital currencies, we also think about digital assets. And a lot of times these digital assets can be connected to the physical world. And so as we think about the evolution of digital assets, whether that be in tokens or NFTs, and certainly connecting those to the physical world, we think this opens up yet another opportunity to invest or to trade against things that people are very passionate about. And so now you've seen that across all sorts of different industries. And now you see a lot more brands that are also taking advantage of this new opportunity. Because again, when you think of this next generation of consumer, it's not only items such as sneakers or collectibles, but it's also digital assets and digital currencies. And you can see that in the trends of other platforms that are seeing great growth on the back of these digital trends.
All right, Scott Cutler, I learned so much today. Thank you so much for stopping by, the CEO of StockX there. Appreciate it. Coming up, how a food delivery startup is fueling an IPO frenzy in India. We're gonna have a special report from Bangalore after the break. Meantime, here in the US, scooter startup Bird has reported second quarter revenue jumping above pre-pandemic levels. The latest report indicating customers are emerging from the pandemic lockdowns and hopping on electric scooters once again. Santa Monica-based Bird is in the process of going public through a SPAC merger. The deal, announced back in May, could value the company at $2.3 billion. This is Bloomberg. Microsoft is raising its prices on its suite of business products. The Microsoft 365 Basic Business Plan, Business Basic Plan, will jump 20% to $6 per user. The high-end version will see a $4 bump per user. Microsoft says the hike is the first substantive cost change since launching Office 365 a decade ago and reflects increased value over that time. The shift will take effect March 1st, but won't include educational and consumer products. Meantime, India is on track for a record year of IPOs with more than $8.8 billion in funds raised so far this year. That surpasses totals from the previous 3 years. And if the pace continues, 2021 would exceed the all-time record of $11.8 billion raised in 2017. So what's fueling the frenzy? One word, Zomato. The food delivery startup went public in July, and despite deep losses and little prospects of turning a profit in the near future, shares have soared more than 70%. As Bloomberg's Saritha Rai reports, that's got other similarly profit-challenged startups thinking.
There are already a lineup of startups going for IPO, including India's 3 largest startups have plans. Paytm, which is one of the largest startups, the digital payments leader, it's filed its initial documents and it's talking about an IPO in perhaps the last quarter of this year. Oyo, the lodging startup, which is backed by SoftBank, is also starting its work for preparing for filing the initial documents. And that could also again come in October. Beju, which is the large education startup, in fact, it's the most valuable startup right now, is preparing work for its IPO, but the horizon is a little more long-term, perhaps 12 to 18 months. You know, many see that India could have a couple of hundred IPOs in the next few years, changing the flavor of the stock market and the appetite, improving and increasing the insatiable appetite of investors for these loss-making stocks. Not a lot of them have any path to profitability visible as yet. But 3 decades ago, India had this huge rush of ID services companies going towards the public markets. Some of these companies are now the most valuable on Indian stock exchanges. In fact, the second most valuable on Indian stock exchanges right now is a company called Tata Consultancy Services, which is the second largest ID services company in the continent, in Asia. So there is a feeling that this could be India's startup IPO moment.
That was Bloomberg's Saritha Rai there. And that does it for this edition of Bloomberg Technology. Tune in tomorrow. We'll be joined by Foot Locker CEO Richard Johnson, along with the CEO of the language learning app Duolingo, Louis von Ahn. I'm Emily Chang in San Francisco. This is Bloomberg.